Hey, what's up, everybody? It's Saturday, April 3rd. I'll tell you, I went walking around New York City today in Manhattan, and literally just about every single store that I passed had long lines of people outside wanting to go in. I think people are running around really excited about spending their stimulus checks. I mean, I can't remember seeing something like that before. I mean, it was really something. There were lines outside the stores just about everywhere. So it looks like we're going to have a big bump in economic activity, bump up, I should say, people running out to spend that stimulus money. So the only problem I can foresee, again, is price issues. In other words, we still got these supply chain problems. People got money in their pockets to spend, they're going out, so we could see some short term, and that's been a concern, right? I mean, that's the bond market's concerned with that. A lot of people have been talking about, they're talking about inflation, but again, it's not inflation, it's a relative price increase, it's a one-time. As the system has to come back online, supply has got to get there, we got to deal with these supply chain issues. The other thing I want to talk about is the banking data for the week ending March 24th. Again, a big drop in loans and leases, but it was primarily concentrated in commercial and industrial loans. They were down about another 34 billion. And, as I said last week, the only way to see loans contract is they get paid off or they get written off. I don't think it's the latter. I think it's the former. I think they're getting paid off because these loan contractions are happening exactly in the weeks when we saw these big disbursements of stimulus money. So I'm assuming that's what it is. And we did not see a big drop this week in real estate loans like we did the prior week. I mean, real estate loans were actually up a little bit. We did not see a big drop in consumer loans. They were just down slightly, although automobile loans were up at a new record high. So that's a positive indicator. So basically, it looks like the stimulus money is going to pay down debt. It was mainly focused this time in commercial and industrial loans. So I don't see that as any big negative. So this week coming up, we'll see what's going to happen. The SLR exemption ended last week. We had a little bit of a reprieve because Treasury sold a bunch of securities, and actually we saw a reserve drain of about 130 billion in the week ending last Wednesday. But the spending is going to pick up. We don't get tax payments. Remember, IRS pushed it back to May 17th, I think, tax filings. So normally this would be a month, April, got to pay your taxes. Big reserve drain, government gets the money. That's not going to happen in April, but we will see the same or increased levels of spending. This is where it's going to be, the what's going to hit the fan, if it is in fact going to hit the fan. I mean, we're going to get big reserve builds over the next few weeks, and if we don't see the catastrophe that everybody has been waiting for so long, then I think we're going to see a really big stock market rally, because a lot of people went short the market based on this expectation, based on, we're going to see some sort of a crack up in the market because of the SLR exemption going away. And like I've been saying, I think the banks have already prepared for that. It's not like some shocker that they did not know this was going to happen. I mean, they knew this was coming. And I think they're all pretty much compliant, but we'll see. I mean, starting in the week coming up, I'll just say, if you see the market strong and if you see no serious trading action in the bond market, even if yields start to come down a little bit. I should mention too, in that banking data, in that week I just mentioned, ending March 24th, another big week of Treasury purchases by the banks. They added to their Treasury holdings. So again, you didn't see a cascade of selling like a lot of people. And I said, that does not solve anything. You sell a Treasury, you get cash, your assets haven't changed. It's just a recomposition of your assets. So it's going to get really interesting. Really interesting in the next few weeks. And again, if we don't see any kind of a meltdown in the market, all of those people who went short in expectation of exactly that, a meltdown, they're going to be covering those shorts and the market's going to shoot straight up. But I'll keep you updated. In the meantime, don't forget, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. I'm the only one who has an applied approach to MMT. I use the concepts and understandings of MMT to invest. See you tomorrow, everybody. Bye.